Today's record's clean. File your returns today.
Uganda Revenue Authority, developing Uganda together.
Good morning, our dear viewers. We are coming to you live from the URA studio here at the URA Tower. My name is Isaac Jagenda, your host today, and I've been joined by a lady, a wonderful lady from Domestic Taxes, Joeria Nachirunda. Today we are here once again to speak to you on topical issues to do with tax, and in a special way, we would like to welcome you back from the Christmas holidays. For those who traveled and came back safely, we want to welcome you back, and we want to also continue to pray that the Lord keeps you safe during this time. We are having a lot of challenges as a country. We are having the Omicron variant, really giving headache to our population. But let us continue maintaining the SOPs as we also work around to develop our country together. Today, in a special way, we are going to discuss return filing and payment of taxes. Today is the 30th day of December, and around this time and in this month, the focus as URA is so much into the payment of taxes, especially the income tax type. And with me is the expert from Domestic Taxes who is going to take us through, and she'll be answering a few of our questions in regards to return filing and payment of taxes. Good morning, Joeria.
Good morning, Isaac.
How are you?
I'm fine. How
Welcome
are you?
back from the holidays. You're looking very smart.
Oh, thank you.
Okay. So, Joeria, today we are going to look at return filing and payment of taxes. Straight to the question, how would someone really look at filing of returns? How would you explain it to a layman who is out there? Someone is there in Chikuwo, someone is maybe having a shop somewhere. They have a business, and many of our youth actually have started small businesses. How would you make it easy for them to understand this process?
Thank you very much, Isaac, first for hosting me and for giving me this opportunity to inform the public about return filing and payments. A return, in simple terms, it is just like telling URA, this is how I've transacted in this period. The period can be either 1 week, 1 month, or an annual period, like 12 months, like the income tax returns. So you are basically telling URA, these were my sales for the year, these were my expenses. If you have any withholding tax, you include and say this is what was deducted from me during the year. And finally, this is the tax I'm going to pay, or I have a refund, this is what you're going to return to me as URA. Basically, that's a return. You're just telling us, this is how I transacted. This is how my business was run during this period. That period you have mentioned. You have mentioned a weekly return, which is for gaming and pool betting, where you are telling us in this week, this is how I've transacted, especially for the casinos. Then we have the monthly returns, the withholding tax, the payee return, the VAT return, telling us, oh, in this 1 month, this is how I transacted. This is what I sold, maybe for VAT. For payee, you are telling us these were my employees, and this is the tax I deducted. So for the annual, you're basically telling URA, this is my sales for this entire period of 12 months. Our period runs from, normal period runs from July to June. So you are telling us from July to June, these were my sales, these were my expenses, I have these assets, I have these liabilities, so the tax I'm supposed to pay is this, and you submit the tax to URA. That is a return, basically.
Okay, so Joeria, in this case, how would I know if I'm a business person, if someone who is watching us today, how would I know that I'm actually supposed to file this return? Who has the obligation to file a return, in simple terms? And you may also tell us who are those people who do not have the obligation to file the returns.
Basically, the income tax law is clear. It tells that people who are registered, who are who are residents. I think people know what a resident is, a person who is not, we don't look at a person who is a citizen of Uganda. We look at a person maybe who has a permanent home in Uganda, who has been in Uganda for more than 183 days in a year, person who has been in Uganda for 3 consecutive years and has been in each of those years has been in Uganda for an average of 122 days. That is a resident person. So if you're a resident person earning income in Uganda, and that income is above the threshold. We have a threshold. Last week we were looking at presumptive, and we said the threshold is 10 million. So if you're above 10 million and you're presumptive, you are supposed to file a return. If you are a company doing business, transacting business, and you are in Uganda, you are required also to file a return. If you are a person who earns income from rental, the other years we had a threshold for rental of 2.82 million. But now that threshold is not there. So if you are a person who earns income from rental, you are supposed to declare, tell URA how much income you have earned from your tenants and how much you have spent. Yeah, I don't want to go so much in detail of rental. Okay. But we also have people who are not supposed to file returns. People who are in exclusive employment. For example, me in URA, if I'm an employee of URA and I don't have any other income source, I'm just an employee, you are not supposed to file a return because your employer files your return on your behalf. He files a pay return indicating the income you have earned, the monthly return, the income you have earned, and also the tax they have deducted from you. So if you're in exclusive employment, you don't have to file a return because your employer does it for you. Then also the non-residents, people who are non-residents, they may not file a return because they also have a final tax, what we call the withholding tax of 15%, and it's a final tax. So if it's a final tax, you don't have to file a return. Then we have other people who also have final withholding tax and you don't have to file a return, in mobile money. If you're exclusive in mobile money and there's a final tax of 10%, yes, you don't have to file because the tax has already been remitted by either Airtel or MTN to URA on your behalf through a withholding tax return. So such people, they don't have to file. But the rest who are transacting and are earning income should file a return.
Okay, so in that case, if because out there you'll hear people saying, but you see, we have been in COVID. The economy has really been not the economic conditions have not been so good. Why is URA looking for? Because people tend to think that returns and filing of the same returns is associated probably with URA coming for money or something. Can you shed more light? How would someone, for example, who has suffered a business shock during this time, how would they comply with URA? Do they also have to file a return in that case?
Yes, you need to tell us how you have transacted in the period. If things were not good, lockdown affected you, COVID affected you, transactions were little, or you didn't have any transaction, yes, you file a return. So if you file a return, you can either file a new return which says that, I've not operated. That is the way you are communicating to us. You are telling URA, in this period, I have not operated. That is why I'm filing a new return. A new return is a zero return. It has no expenses. It has no sales. No assets, there's nothing there, it's just nil. Okay. When you file that return, you are telling us, I have not operated in this period. Then also the other option you have, you could have incurred expenses. You may not have had sales, but you've had some expenses, or you had little sales. Yes, you did transact maybe you transacted in a certain month, January of the year, but remember you are reporting for a period of 12 months. So you will tell us, this is how I transacted. I only earned 2 million on the expenses, and the expenses I had are 3 million. So if the expenses are more than the sales, it means you have an asset loss. This asset loss, you are allowed to carry it forward to the next financial year. Okay. So it will reduce on your final liability of the next financial year. So if you keep quiet and you don't tell us, we shall not know that you have not operated. We shall not know that things were not good. You didn't do well like the way you used to. Maybe your returns were always 200 million. But now you have nothing. You are in losses. And you have nothing to pay. If you keep quiet and you don't tell us through a return, we shall not know. So you have to file a return, tell us, okay, I've transacted like this, I had a loss, my expenses were more, maybe I overestimated that I would make sales, but I didn't, something like that, but through a return.
Okay.
Yeah.
So, dear viewers, I think it's clear. Joeria has explained to us that regardless of how your business is doing, a return is mandatory. You need to declare, you need to tell URA how your business has performed for that specified time period. And you need to actually tell us the truth. If it is a loss, you declare so. If it is nil, you declare a new return. You can actually file a new return. This is very common for businesses that have just started, where you've not yet gotten business. So before we go for a commercial break in a few minutes, Joria, you're going to take us through the various types of returns. When is one supposed to file?
Okay.
And then probably for someone to understand where their obligation falls in detail. Yes.
Okay, we have 3 categories of returns, just like I mentioned at the beginning. We have a weekly return, and one example is the gaming aggravating return. It's a return for just a week, the way you've transacted in 1 week. And this return is supposed to be filed by Wednesday of the following week. So every Wednesday we expect a return from someone who is maybe in a casino, someone in pool betting. You tell us these were my customers, this is how much money I got, this is the withholding tax I deducted from them, this is the income I got. So you file that return and tell us, that's gaming and pool betting, by Wednesday of the following week. Then we have monthly returns. We talked about payee, the one on salaries and wages for employees, on employment income. So this one is supposed to be filed by the 15th of the following month, but it is filed by the employer, the one who has employees and who has deducted payee from their salary. So it should be filed by the 15th of the following month. Then we have a VAT return, which is supposed to be filed by those people who are registered for VAT. Our law requires that everyone who is earning above 150 million in a year should register for VAT.
150 million as profit?
No, as sales, your turnover,
Thank you.
your total sales for the entire year. If they are above 150 million, you should register for VAT. But I also remind you that people who are registered for VAT now, starting the last month, November, you are supposed to include in your return physicalized invoices and receipts. So as you file that return, you have a deadline of 15th of the following month. In other words, you have from from the beginning of the month to the 15th of the month to file that return. When we say 15th, we don't mean that you should file on the 15th. No, we give you 15 days to file this return. Give you 15 days to prepare, gather all your invoices, all your receipts, and file the return. So in this return, you are basically telling us, this is my sales, these are my purchases, these are my expenses. On the sales, you indicate the output tax, the one that the VAT you've charged on your sales. Then on the input, you indicate the input tax, the one that you were charged when you are buying or when you were incurring, maybe an administrative like rent or power or electricity. So in that return, that's what you tell us. You tell us, then after, you submit the return to URA by the 15th of the following month and pay the tax due still by the 15th of that following month. For example, November, the due date was 15th December. Although for December there was an exceptional case, we extended by 2 days, but it's supposed to be 15th of the following month. Then we have the withholding tax return. And the withholding tax return is filed by people who have withheld from their customers some money. For example, if I supply portion to URA and URA withholds a 6%, URA is supposed to file a withholding tax return for that month in which they withheld from me, and indicate this transaction, the amount that they are paying me, how much they have deducted from me, and after generate a tax credit certificate for me, which tax credit certificate we shall use in the annual return when you're filing the final income tax return. So those are the monthly returns. Then we come to the income tax returns. Okay. Income tax returns, we have 2 categories. We have the provisional return, and then we have the final return. The provisional return is an estimate of what we expect to earn in that year. For For example, this year is last year ended 30. Okay, this year is ending 30th June 2022, and it started 1st July 2021. So this year for companies, you are required to file a provisional return by the last day of the 6th month. Our normal year, unless you've applied for a different year, what we call the substituted year, unless you've applied to change this year from July to June, the normal year still remains from July to June, unless you apply to change. But if you have not
For
changed,
example, January to December.
that one we call it a substituted year of income.
Okay.
So if you have not changed from July to June, it means you are supposed to file your provisional return if you're a company by 31st December, which is tomorrow. So we are encouraging people who are the companies that haven't yet filed. You have only today and tomorrow to put in your provisional return. It is an estimate of what you expect to earn, and this should be filed by the last day of the 6th month, which is 31st December.
Okay.
Yeah. Then we have a final return. For the individuals, we also have a provisional return. An individual is supposed to file their provisional return by the last day of the 3rd month. For example, you said our year runs from July to June. So the 3rd day is September. So that means you file your provisional return by 30th September.
Okay.
We should have received your provisional return. And you're required, maybe if there's any tax to pay, you are required to pay that tax in 4 installments. Yeah. Then final return for both, you are supposed to file it within 6 months after the financial year has ended. We said financial year ends 30th June. So if the 30th June has ended, we have passed it. Now we passed it. The year 30th June 2021 is done. That means in this period from 1st July to 31st December, we are expecting final returns for those people. And also your deadline is tomorrow. So we expect you to file your final return in this period, whether you are an individual or a company. We expect it by 11:59 of tomorrow, that 1st December of tomorrow. We shall look at the consequences. But if you don't file it, of course, there are consequences. We shall know later. But we are expecting you to file it by 31st December after the financial year has ended within 6 months. Okay? So that's it. Those are the types of returns and the due dates.
Okay. Thank you so much, Joeria. We have all heard from the expert. For someone who is required to file an income tax return, I hope you've heard the due dates. Today is 30th December, and we just have a few hours to close the calendar year, but also from us at URA, we are counting down 6 months of the financial year. So I want to remind our dear taxpayers that let's look out for our obligations and be able to honor them before close of business tomorrow. We are going to have a small commercial break, and when we return, we shall be able to look at now the process. Joria will be taking us through the process of how to file that return, and probably we'll also know what are the consequences. But also, before we even look at the consequences, we would also want to know what are the benefits if someone is tax compliant. Because I know a Ugandan out there is interested in knowing what is in it for them anyway. Yes.
Okay.
In chess, the small one can become the big one. It's the same here. And here too. Watch every move. Record every number so you can plan better. No matter the size of your dream, tomorrow's success belongs to those who keep today's records clean. File your returns today.
Uganda Revenue Authority. Developing Uganda together.
That's my little angel Rose. Together with millions of other children, my daughter Rose is assured of learning something new every day. Moses, my husband, just like many other commercial farmers, has his business supported so he can provide for us. When my other little one was on the way, even with my pregnancy complications, it was a quick, smooth ride to Mulago Specialized Women and Neonatal Hospital. Also, my new baby was able to make it through his first days with the help of specialized equipment thanks to the reliable electricity which has also been extended throughout the country. All this and more has been made possible because of you.
Join us and together let's do more for our country. Get your free tin at www.ura.go.ug.
Thank you for paying your taxes.
Uganda Revenue Authority. Developing Uganda together.
Capo, you seem to be in a hurry. Where are you going to?
I'm gonna pay URA visit.
Why would anyone visit URA? Of all places?
To know more about the Kakasa business solutions, namely digital tracking solution, the voluntary disclosure program and electronic fiscal receipting and invoicing solution, which have turned my business around. You know I need to be on top of my game to protect my empire. If you know, you know.
I too need to know what Capo knows.
Kakasa, be sure you are in charge of your business. Uganda Revenue Authority, developing Uganda together.
Wait, Abu, tunamaliliza. And what are you doing throwing papers all over the place?
I'm looking for an invoice for a sound system and cables that I received yesterday, but I can't find it.
You know there is a way of keeping all this in one place and available to you as and when you need it.
I really wish there was one, because the way these invoices grow legs and disappear.
I believe this is what you're looking for.
Now how did it get there?
Tabo! Do you know that with EFRIS, you can stay on track of all your business transactions and improve on your record keeping?
How so?
Kati tuli ku computer with EFRIS. I just search using the fiscal document number and I retrieve the records I'm looking for. Bookkeeping becomes simple after that.
Capo, awesome, yeah.
I began using URS Kakasa Solutions and now I'm in charge of my business. And you can as well.
Kakasa, be sure you are in charge of your business.
Uganda Revenue Authority. Developing Uganda together.
In chess, the small one can become the big one. It's the same here. And here too. Watch every move. Record every number so you can plan better. No matter the size of your dream, tomorrow's success belongs to those who keep today's records clean. File your returns today.
Uganda Revenue Authority. Developing Uganda together.
Dear viewers, welcome back from that short commercial break. We are still discussing the topic of return filing and payment of taxes. And in the studios, we have Joweria Nachirunda from the Domestic Taxes Department, who has been taking us through a number of issues to do with return filing. Joweria, during the break, we also got some questions. In the first session, we got some questions, which I think we'll be answering in due course. But I'm going to give you an opportunity to first and foremost take us through the process of return filing. I think you will be able to share your screen. Okay. And then the viewers will be able to see how this process actually goes. Our dear viewers, please pay attention to what you're going to see on the screen. We really hope it should be able to answer your questions on how this process generally goes. So, Joweria, over to you.
Okay, thank you very much, Isaac. To file our returns, we have to go to our website, ura.go.ug. Hope you'll share the screen. This is our website, ura.go.ug. On the page, home page, you can scroll down. There is what we call download forms, then download online forms, download manual forms. So you can go to download online forms because our return filing process is online. So we use online forms. We don't use manual forms. So you get an online form from here. You click on download online forms. You scroll down and go to forms and templates for the return. So there are various returns here. We shall see what each return does or it's for who. So the first return you see up there, the DT 2001. We have two columns, first of all. There is a column for instruction kit. Then is the column where we get the template that we fill in and validate and upload as our return. So under forms and templates, we have various returns. We have an income tax return form for individual with business. This is for those individuals who have business, like the sole proprietors. Yeah. So they use this form, DT 2001, when you're filing the final return, when the financial has ended, the one which is due today for tomorrow for 30th June. If your due date is, if your accounting date is 30th June, that means you should be using this return. And if you're a sole proprietor who is not presumptive, we looked at presumptive last week, who is not presumptive, this is the form you will use. DT, income tax return form for individual with business. So this is the form used by the one in the last column. Then we have an income tax return form for non-individual. This is for a company, for an NGO. This is the form you use. In this form, it has various schedules, various sheets which you need to fill in. Then we have an income tax return form, income tax provision return form for individual. So any individual who is required to file a return and wants to file their provisional return, this is the form you use. Whether you are rental, whether you are an employee who is working for a diplomatic mission like U.S. Embassy, this is the form you use to declare your provisional return. Any individual who is required to file a return, we looked at those ones. It is DT 2003 by the last column. You download that one, and it's the one you fill in, validate, and upload. Then we have an income tax return form for non-individual. This is the provision of a company, for an NGO, any person who is not, or an official person like an NGO or a company. This is the form you use. There is a mistake that we normally do here. Income tax return form for provision of a non-individual is for everybody. But you will see that when you look at the final, a partnership has its own form. Okay. Because by the nature of a partnership, it does not pay tax. Yes. It is the partners that pay tax. Okay. That's why you will see that the next form, the income tax return form for partnership, is there. We don't use the non-individual because the non-individual may be liable to some tax. Another one will ask, how about an NGO? Do NGOs pay tax? Yes, NGOs can pay tax if they have any income generating activity. They receive money from other than donations. Okay. So you pay tax and you declare your donations as income received. Okay. But for a partnership, it does not pay tax. It is the partners. So this income tax return form for a partnership is like an information return, business information return. You put in your details for the partnership, the partners and their share of the income. So it has also different schedules that you're supposed to fill in. Then we have a withholding tax return form that is D2 2006. It is the one that is filed by the people who have deducted some amount from you when they are paying you for any service you've rendered or good you've supplied. So that is used by, it's a month return. We talked about it. Then we have an income tax return form for individual with employment stroke rental. This is a person who has rentals but is also in employment. So in this return form, another one said, but I've been paying tax as an employee. In this form, in this template, there is always a schedule where I include the income that you've received from employment, and also there is a schedule where I include the pay that has been deducted so that you reduce it on your final liability because it is tax already paid in advance. So that is the one you use if you're an employee who has some rentals, or you land that you've rented out and they give you money, or a house.
What if the employee has no rentals? They have, say, a retail shop.
If a retail
What
shop,
would they do in that case?
no, they will not use this form. They use the first one, DT 2001, because they have business.
Okay.
So in that form, still for businesses, a schedule for rental, a schedule for business, and a schedule for employment. So you don't use this form. You use the upper one, DT 2001. Then we have the pay return form. This is the one for the employees, the one that is filed by the employer. Then we have the income tax return form for presumptive. This one we are no longer using because now we upgraded. This, unless you are filing for a period that was before 2016, before 2015. Because in 2015 we upgraded, we brought the presumptive. We actually changed, we started using, we don't file a presumptive. I think we looked at presumptive last week. I don't want to go so much in detail, but a presumptive taxpayer is one who earns between 10 million and 150 million and should not be a professional and should be a resident individual. So if you are a resident, you can be presumptive. We shall look at it. I know we looked at it last week, but briefly we shall show you. So this one you don't use unless you are filing for a period before 2015. That's when you use this form. Because we made it easier. You just go register the payment. As you register the payment, it will be your return. Okay. So we also have the local excise duty return. This one is filed by the usual manufacturers, people who have excisable goods. The people in insurance, as long as you have an excisable service or a good, you use this form. So if you are not registered for lead, we don't expect you to use this local excise duty return form. Then we also have gaming tax return, the one we talked about. In gaming, we have two returns. We have the weekly return and we also have the monthly return. So this one, the gaming tax return form, the DT 2026, is a monthly return. Then we also have the gaming weekly return. It's the one that you file by Wednesday of the following
So
week.
if I'm to get you well, gaming has two returns.
Yes.
Okay, so what's the difference between these two returns, apart from the fact that one is done on a monthly and the other one is on a weekly? In kind of why do we have to file two?
Because you see, with gaming, the nature of the business
Yes.
necessitated us to have two returns. Because you see, there are people who come. In gaming, it's not easy to track your customers the way it could be in any other businesses. Because the people who come today may not be the same people who come tomorrow. So if we keep these details with you for a long time, you may not be able to track. And also in gaming, we have a withholding tax of 15% to a person whom you are paying. The winner, okay. A winner. You are supposed to deduct 15% from their win, for that amount that they have won. And also you pay 20%. But if you keep it for a long period, because you don't know the people you are dealing with. So at least we would love to see this weekly, at least to see how you are transacting. And then the monthly would be just a consolidation.
Okay.
Then we have a monthly VAT return. Monthly VAT return we talked about is for VAT registered taxpayers. Okay. If you're registered for VAT, you can file this return. But we also have people who can, you can just use, I don't want to go in detail of that. Then we have diplomatic VAT return. This one, you see, by nature of diplomats, they are not supposed to pay any tax. Because they are not supposed to pay any tax, in VAT, the law does not exclude any person from paying. So, in other words, if it was excluding, the diplomats would not be paying tax. But because you cannot go to a supermarket and say, okay, me, I'm a diplomat, you give me the sugar at 2,800. I'm a diplomat, don't give me at 3,000. So because you cannot do that, we put a provision for them. They are supposed to file a diplomatic VAT return. So in this return, they are claiming any VAT that they have incurred during the period, and it's supposed to be paid back. Because the law said it does not exempt people, but exempt supplies. Okay. We have the exempt supplies, then we have the standard, but here in this case, the taxable supplies are exempt. But in this case, we are saying diplomats, please pay the VAT when you go to the supermarket to buy something. You claim it in a diplomatic VAT return. Then we have the return filing from the bulk assessment agent. We have people who deal in transactions of stamp duty. Enormous transactions like the insurance companies, the banks. So those ones are supposed to file a the bulk assessment return to declare that stamp duty. But it's also supposed to be filed by the 15th of the following month, just like these other monthly returns. So those are types of returns. So if you want to file a return, you download that template.
Okay.
After downloading it and filling in the details, I don't want to open it because it's so detailed, but anyone, if you see where you belong, because we have explained, if you are in the video and you want to file a provisional return, you'll go download that provisional return form. After downloading it, you fill in the detail. Of course, you enable editing. You fill in the details. The way that I usually, the first page is, have a sample. The first page is return details. Let me look for a sample.
You
here.
could just maybe do a snapshot. We will be looking at your questions, dear viewers, but we can just have just a snapshot of how the first page of the return looks like, what they are required to do. We may not go through it, but you could just maybe show what happens like in the first page, like that, like say the TIN and all those details.
Okay, this is a return for a company, a final return for a company. It has various schedules.
Yes.
So this is the first one. I said income tax return for non-individual.
Okay.
So on the first page, usually, you're supposed to put your TIN. Then you put the period. Our period said it starts from 1st July, unless you applied for a substituted year of income to change from July to June to maybe January to December. But if you are in this year, it's usually 1st July 2020, then the year end, it ends 30th June 2021. So this is the first page. You include the return details. But most people make mistakes here. Our date is supposed to be in this format. Even as you see the guide, under date, it says enter date in DDD month YY. That is the format you are supposed to enter the date. If you change the format, you may not be able to upload this return. Then also the other mistakes that people make when you're filing this return, changing this name. When you change the name, because there are some security settings enabled in the naming, once you change the name, you may not be able to submit. It may look at it as if it's a different sheet. But what we advise, you can add something. Just like, for example, this one is IT return, non-individual. But I added something like Linen 2021, just for me to remember. But I should not put a special character. I should not change it. Or if I try to change here, I put this underscore here, like the one you see here, return underscore non-individual.
Okay.
Yeah, so that you don't disable our security settings. So you will fill in the relevant. This return sometimes may look enormous, like it's so huge, so complicated, because it caters for everyone. It is a return that is filed by a non-individual, the same return filed by a trust, same return filed by an estate, same return filed by a company. So, and companies dealing in different things. The one who is in service, the one who is in goods. So because it caters for everyone, you only feel what is relevant for you. So as you can see, in this return, because this one I think is, we have visual first page for every return. For final return, it's just a summary of what you filled in the details. This summary comes from the schedules and those other parts that you have, these schedules. For example, you have a schedule where you include your assets, IBD, your depreciation, all those things. But if you have your transactions with you, this return is simple. Just fill what is relevant for you. What is not relevant? For example, if you're not in manufacturing, I don't expect you to fill this section of quality, quantity details of stocks, manawati. There's things which may not be relevant for you. Okay. So you feel what is relevant. Because if you're not in manufacturing, then why do you have to fill the raw materials under manufacturing? You are not in manufacturing. So fill what is relevant for your business. So that is a return. So after filling in all these details, after filling in all these details, you go to the last page, you validate. The last page usually has a validate tab. You click on validate. Once you validate, you generate an upload file. This upload file that you're generating is the same return, but it may look empty, but it's just made smaller so that we can be able to upload it. So you save your upload file somewhere where you can easily get it. So after saving this upload file, you go to the portal, our website. You log in. with your TIN and password. This is our website, ura.go.ug. I'm sure if you have a TIN, I think you have ever visited it. So this is our website. It's ura.go.ug. So you go to log in here. You put in your TIN, the one that you included in the return. So after putting your TIN, you put in your login ID is the TIN. So here you put your password. You should be knowing your password. You don't have to share it with anyone, or unless that person is supposed to do some work with you and maybe is your employee or your agent. Maybe you can give them, but we don't expect you to share this password with anyone. So you will log in with your TIN and password. Once you log in, this is what you see. You go to the left-hand side and click on e-returns. Okay. So once you click on e-returns, we have 3 columns. We have a column for original, a column for amended, and a column for others. So if it's your first time to file this return, you go under original and select the return you want to file. In this case, you want to file an income tax return, final. You will click on it. But if it's not your first time to file this return, for example, someone who filed a provisional return and wants to amend it. If you filed a provisional return and maybe you have a subsidy of income, your year runs from January to December. In this period, you can amend your return because the year is ending tomorrow. Okay. So if you filed and anticipated that you are going to make 20 million, but you realize things didn't go well, you're only going to make 10 million, you file an amended return. So amended, you come here and select it, income tax final. But now, since you're filing original, you got original, income tax original. So you click on it, you click on the return that you intend to file. Here, you put in the period, from which period, the way it is in the return. That is, our return is July to June. So it will be first. It will be first July 2020.
So you're doing a final return?
Yes, this is
for
a
the
final
previous
return.
financial
But
year.
even if you don't go the other side to download the template, you can still download it from here, especially if you don't have too many transactions. You could just go here, get the template, maybe it's provisional, put in the amount to submit. So once you select the period, you click on check. Unfortunately, this person has already filed. But when you click on check, you will browse that upload file that you saved. Then you submit it. Once you submit it, you receive an acknowledgement and a payment slip in case there is any tax to pay. Okay? So that is how we file a return, basically.
Oh, thank you, Joeria. Our dear viewers, I think you've been able to see the process of return filing from a practical point of view. Joeria, as you were demonstrating, questions were busy raining in the chat section. And I want to thank you that you've been very elaborate in your explanations. I'm seeing some of my, when I look at the chat, I'll be reading some of them so that you could respond.
Okay.
So we have Ahmed Chivuka, who asked, hospitals required to register for VAT? And then we have another, that's question number 1. We have another, I think this is an unknown number. Kindly repeat the timelines for filing of provisional tax for companies with financial year 2021-2022. So, Joy, I think you'll have to throw a bit of more light on those deadlines.
Okay.
I would request you look at a company that has the normal financial year, but also you can bring in the aspect of companies that have a different one.
Substitute.
An example. And then we have another colleague here, Rogers. My financial year runs from January to December. When am I supposed to file provisional income tax and final? I think it's related to the previous question. Okay, we had a bit of, I think, a glitch with the screen. It was not appearing well, but but we are going to make it better in our future sessions. Someone is requesting here also, take them through how to file an income tax return. I think we've labored to do that. But also, what I need to tell our viewers is we have some instruction guides on our YouTube channel that you can make use of to familiarize yourself with the process of return filing.
We also have this on the portal still.
Yes, even on the portal, we have some visual guides. And then we also have another viewer here was asking, is it possible to take us through how to fill the forms for pay as you earn? Okay, we've done for income tax. I don't know if time will be enough. But then there is someone also who is asking, if I fail to file corporate returns by 30th September, will it be possible to file final returns by 31st? I don't know whether that's clear. Yeah. Okay. The questions are many. Another one. Kindly specify which form I can use for directors who are employees too, with no rental and any other business.
Okay.
A director who is an employee of a company, but they don't have rental or any other business. Okay. Okay. Are NGOs required to file provisional tax? Yes, they are. I think Joria mentioned this in the session. She will continue to throw more light where necessary. Okay. If one has changed, this is Justin, if one has changed the year of income from July to December to Jan to December. Is this clear?
Yeah.
Did he mean July to June, I think? To Jan to December. What do we do as an organization? Do we write to URA applying for a change of year? Kindly guide.
Okay.
I think you'll look into that.
Okay.
Kindly talk about withholding of income tax and how it's done. Okay. Let's first look at those ones.
Okay.
Probably in the next 5 minutes, you could summarize, and then we get some more.
Okay.
Yes.
Okay, maybe I start with Chivuka.
Yes, Chivuka
Ahmed.
Yes.
Chivuka Ahmed, you wanted to know if hospitals are required to register for VAT. Like I said, VAT, if you are earning above 150 million taxable supplies, you are required to register for VAT. But you find that the service that the hospital provides is an exempt service. Medical service is an exempt service. Even if you say, okay, they have a pharmacy, the pharmacy, they supply the goods they deal in, the medicines, they are either zero rated or exempt. Zero rated, I don't know, maybe I may start explaining with taxable supply. A taxable supply is an item which is neither exempt, because we have a schedule in the VAT Act, Schedule 2. It lists all services or supplies, goods and services that are not charged VAT. So if you are in the service of hospital or medicine, medical services, because the hospitals are services, medical services, it is exempt. Because the service is exempt, it's not a taxable supply. Therefore, there is no VAT. So if there is no VAT on the service that we are providing, you don't need to register for VAT. Unless you have any other service that you are providing, that is not medical service. Okay. Yeah. If maybe they have also, the hospital also runs a restaurant, maybe the hospital also has accommodation and it's not charged as a service.
That the hospital is purely hospital,
they would not require to register for VAT, because the service they are providing is a medical service and it is exempt from VAT as per the VAT Act, second schedule. So you wouldn't, unless you have any other service that is taxable. So if you are not on the exempt schedule, Schedule 2 of the VAT Act, it means the service you are dealing in is taxable. So if it's taxable, you have, and you are making above 150 million, the law requires that you should register for VAT and file VAT returns. But we also have people who are dealing in zero-rated supplies. Zero-rated supplies are taxable supplies. For example, people who are selling medicine, who are making medicine in Uganda, maybe say Koito Chemicals making Panadol. If you are supplying medicine in Uganda, made in Uganda, it is zero-rated. So it's a taxable supply. The difference between exempt and zero-rated, with the exempt, you don't claim anything, and you may not need to register for VAT. But for zero-rated, any input that you've incurred in making this supply, you can claim it.
Can you give examples?
An example, we have exports. Okay. We have exports. We have the medicines made in Uganda. Okay. There's a difference because the medicines made in Uganda are zero-rated, but those ones which are imported are exempt. So it means those ones which are exempt you don't claim, but the ones that are made in Uganda you claim. If you export any item out of Uganda, you can claim any input that you've incurred if you're registered for VAT. But the person who does not export will not claim. Those are some of the goods which are, and this is in the third schedule of the VAT Act. There are others, but those are the most common. International transport, because it's also like an export. Yeah. So there are others, many others. So the hospital, if it's just that, you don't have to register for VAT because the service you did in is exempt. Then we have the other question. Someone wanted to recap on the due dates.
The due dates for provisional and final. You can combine the calendar year and then the financial year.
So our normal year, we said is a period of 12 months, ending 30th June. So that means if the year is ending 30th June 2020, our year, this year we are in, is going to end on 30th June 2022. So if you are a company, you will be required to file your provisional return by 31st December because the due date is the last day of the 6th month of the financial year. So our last day is 31st December. So you'll be required to file your provisional return for this year by 31st December, tomorrow. Your last day to file the provisional return, but you also be required to file your final return for the period that ended, which ended 30th June. So you file your final return indicating your sales, your expenses, your assets, liability is in that return by 31st December. If you are a company, but if you are an individual, you were required to file your provisional return by 30th September. And you'll be required to file your final return still within 6 months after financial has ended, just like a company or an individual. So, and you are required to pay this tax within 4 installments. So, since your first installment was required by 30th September, we expect your second installment by 31st December. Second installment for an individual.
So if I file the provisional return with a tax liability of 8 million on 30th September, how would I pay that 8 million?
So in 8 million, you have to divide by 4. So and pay quarterly. A quarter of each quarterly. That means you pay 2 million by 30th September. Then another 2 million by 31st. Then another 2 million by 31st March. Then another 2 million by 30th June. So that is the obligation. Then if you have a subsidy of income, like maybe January to December, you were required to file your provisional return by 30th June. Because we said the provisional return should be filed by the last day of the 6th month. Yours is not now June, yours is December. So we are expecting your provisional return by 30th June. But you are at liberty, maybe you overestimated or underestimated. Maybe you said, in this year I'm expecting to get 200 million. But you realize the year is ending, it is ending 31st December tomorrow. You realize you only got 10 million. You can amend your return now because the year has not yet ended. You can amend your return now and include what exactly happened. Because if you don't want to amend this return and we go to your final return and maybe you overestimate. Maybe, for example, if a person underdeclared, this time it could be you overestimated, but you could also have underestimated. Let me say maybe you expected 10 million, but you've earned 300 million. Then you file a provisional return of 10 million, but when it comes to a final return and you indicate 300 million, there is a discrepancy. So we give you what we call a penalty for understating provisional tax.
Oh, really?
That is why it is always good to know and amend your return. Before the year ends, the year is ending tomorrow. So that person who overestimated or that person who underestimated, the year is ending tomorrow. You have a right to amend that return and include that income, because at least by now you know how much you've earned. Your year is ending December. By now you know that, okay, I thought I would earn 10 million, but I got a contract with prisons, I got a contract maybe with National Water, and I got 300 million. Please amend that return, remove that 10 million and put 300 million before the year ends to avoid the other penalty for understating provisional tax when you file your final return.
Okay. Okay. The questions are done.
Wait, there is another one.
Okay. We have some
Final
more
return
here
for
in the
due
chat.
date.
We are
Now,
going to-
there is a person who asked which the director, if you're just a director of a company, which return form do you use?
And
You
you're
use
an
the one for
employee.
you use the one for employment stroke rental.
Stroke rental.
Yeah, but you only fill the details that are related to employment. You can leave the rental blank. Then they said there another one who wanted to know if I want to change the year of income, what do I do? First and foremost, you can apply in your TIN account. You log into your TIN account. You've seen how you log in with your TIN and password. Then you go under e-services. Just above e-returns, there is registration. Once you click on registration, if you are an individual, there is a tab for individual. If you are a company, there is a tab for non-individual. You click on it. And then once you click on it, you get a template with different boxes. So you tick the box for TIN and box for accounting date.
Okay.
Yeah.
So they are attempting to change the accounting date from the normal of July to June to any other.
Yes. So after you go to the last page, you go to that page, you put the period that you want. Now you say, okay, it was now June, I want to January to December. So you indicate. Of course, you also give us the reasons why you want to change. Usually people say, I deal, I'm a multinational company. Your reasons, give us your reasons. Then you submit. It will come to someone, an officer in URA, who will process and maybe contact you to confirm what you said and then approve.
Okay. Thank you, Joeria. Our dear viewers, you've heard from the experts. Joeria, we have some few more questions, which I think we'll run through before we close the session. There is a question on how talk about withholding of income tax and how it is done. I think you summarized for him. Kindly, I have an association to file for. It made a loss, and the provisional return was nil. How do I go about it? Why must one have an employer for the purpose of obtaining a TIN? Okay, I don't know. That one is to do with TIN registration. Under what circumstances are individuals allowed to deduct expenses first and then tax profit? This has to do, I think, with the computation of income tax, you know, the chargeable income, the gross. You'll just give, I think, a highlight on that. Do you deduct what you paid in your provisional from your final? I think they want to know if, for example, when they are filing a final return, the tax they paid during the year is actually part of their would-be credit. You'll be able to throw light on that. How does an individual estimate their profits? This is Brenda. How does an individual estimate their estimated profits for that year, financial year, so that they can file the correct provisional tax? Okay. I don't know if it is understood.
How to estimate your income?
Yes. It is similar to, I think, a question asked previously. Do you declare your surplus or do you declare sales revenue on the provisional tax? I don't know, John, this is not so clear. I don't know if you've understood it. Do you declare your surplus or do you declare sales revenue on the provisional tax? Let me run to the Q&A here. I think Roger's question was answered on the issue of the provisional returns. Duncan, those earning only from the business through salary, what form do they use to file their returns? I think, Joria, you've mentioned it. It is the income, employment stroke rental return form. What happens if I fail to file an amendment? I think he must be talking about amendment of provision, eh? Unless if I've gotten you right. If not, you could just send a message in the text box. For my company expenses, do the receipts from the suppliers have to be IFRS, or can they provide their private receipts, not URA generated? Okay.
For which return?
It depends now. Company expenses, you will probably try to contextualize it. It's general. Yes. Yeah, so Joeria, those are the questions. I don't know if I've left anyone out, but you could try to scan through, and then we close the session.
Okay, let me start the one with the withholding tax. I don't know if the screen can be shared. Are you seeing it? Okay. Someone wanted to know how you claim the withholding tax in the return. In this return, the final return, any tax that you've paid in advance is supposed to be included here. For example, for a company, a non-individual, if you paid, you are deducted any tax, you're supposed to go to Schedule H, because it is a summary. After including all your sales and your expenses, maybe you have a profit of this amount. Let me say this one has 2.19. But under that schedule, section H, there is where you include the provisional tax paid. Any provisional tax. For example, people are filing provisional now. Okay, people who filed provisional for last year, and they paid some provisional tax, because we said for a company you're supposed to pay in 2 installments. Maybe you paid the first installment by December, and the second installment by June. And now you're filing a final return here in December when the financial has ended. You're supposed to include all that income, that amount you've paid under section H, part A, as you can see on the screen. You include the bank, the date of deposit, the amount, is it for rent or for business, then the payment number, then the amount for any provisional tax you've paid. Then we have someone who has been deducted, if you are a person who has been deducted withholding tax during the year. If you have been deducted withholding tax during the year, under section H, part B, that is where you include that withholding tax that has been deducted from you. You include the name of the withholding agent, the TIN, also the tax credit number, tax credit certificate number, the reference number. You have to include it here. Yes, these taxes, these days when you withdraw from me, we post it on your ledger. But if you don't claim it anywhere, we may not 20,100, because you had withholding tax and also had provisional tax. So it reduces on your final liability. Even if you are an individual, there's section G. Section G for an individual return also does the same. This one is for a company or a non-individual return. And that is where you include any withholding tax that has been deducted from you. Then another person asked that, do you declare on the surplus, on the sales for provisional? Do you pay tax on the surplus, on the sales? You pay tax on the chargeable income. And chargeable income, your estimated chargeable income. Another wanted to know how do you estimate. You could be having contracts with your suppliers. You know, I have a contract, okay? My business maybe is to train. I'm training. I have a contract maybe with Narrow to train their employees, and the estimated amount is, okay, the amount in the contract is 10 million. I also have a contract maybe with URA, and I'm expecting maybe 20 million. So you add up all those contracts, the amount you are expecting to receive, and maybe your constant customers. So that will be your estimate. That's why we allow you to amend a provisional return as many times as you want, because things can change. I could have had this contract with Narrow, and something happened, and we didn't take off. So I was never maybe paid because I didn't maybe provide the service, because something happened, or lockdown came and we are not able to meet, something like that. So you make an estimate, but we are saying in the provisional return, the tax is on chargeable income. It is not on sales, total sales or surplus. So chargeable income is that income you've earned less any expenses.
Okay.
So you make an estimate that, yeah, these are my sales, but I expect to spend this and this and this. So you pay the tax on the chargeable income, not on the sales and not on the surplus. Okay.
Thank you, Joelia. Friends, we have, okay, someone is asking how much time does URA give to amend a return, which I think for the provisional you mentioned that the return can be amended anytime, as many times during the year. What of the final return?
Final return, you are given 3 years to amend the return. It was 1 year, but this financial year, the period was extended to 3 years. It used to be 3 years and it was taken to 1 year, but now it's back to 3 years.
Are
So
there
you have
any
3 years.
conditions for that are tagged to?
No, like I said, an amended return is subject to verification. You amend your return as we shall verify that information you have given us. So you can amend with this return within 3 years. So if that 3 years elapsed, you cannot amend this return. We shall take it that it is that one. The final return, provisional many times as you want, as long as it's during the year. You don't amend it after the year has ended. Then final, you can amend it within 3 years.
Okay. So, Joelia, as we wrap up this session, what message do you have for the Ugandans who are watching us probably within these last few minutes? One, probably tell us why should someone pay tax? Okay. What is in it for them? What happens if they don't comply? Okay, you could give us a summary, and also you tell us in case someone has a challenge, because we've seen the questions are really running in so many, and we need to assist these taxpayers actually to comply. Where do they run to for assistance, for example? How are we supporting them as we run up to the deadline of the return filing in a few minutes?
Okay, so we have some benefits, of course, of complying, and we also have consequences. Like they say, in tax, we have what we call a carrot and a stick. Of course, there is the carrot, which we give you, and there is a stick when you fail to comply.
I'm interested in the carrot.
Of course. So with benefits, first of all, if you are a compliant taxpayer, we have what we call withholding tax exemption. You've heard of withholding tax. Many people have been complaining that withholding tax eats into my capital, it's making my business collapse. So if you are a compliant taxpayer, you can be exempted from this withholding tax. We can exempt you and say, okay, you for this period, but it's through application. Yes, you should be compliant, but apply. Apply through an application in your TIN account, and then we shall exempt you from the withholding tax. So for you, whenever you import, no one charges you withholding tax. Whenever you supply anyone, they give you a full amount. That 6% is hurting some people, it's hurting some businesses. And also, so anytime, as long as it's not a final tax, you are exempted from withholding tax. For you, because you have been seen to be compliant, you file on time, you pay on time, your declarations are clean, you have accurate reporting generally. So if you are okay, you are compliant, withholding tax, they will not charge you because we have seen you are compliant. Then the other thing that we have what we call CRMs. If you are a compliant taxpayer, we will attach you to someone who's sweet and nice, who will be reminding you, okay, your due date is this date. Which if you want a tax clearance, they can help you process it early. Let me talk about a tax clearance. If you are a compliant taxpayer, you know a tax clearance means you are compliant. We give you a tax clearance certificate without disturbing you that first go amend here, first go and file this return for this period. We shall process it very fast. Within 2 days, you will have your tax clearance. So if you're a compliant taxpayer, you will have access to bidding, pre-qualification, because the tax clearance you have. And one of the things they ask for any person who wants to bid or apply for pre-qualification is a tax clearance. So you will get it very fast because you are compliant. And that means it is access to more work, more customers, and more income, obviously. And the more income you get, of course, that's what we want, because the more tax you pay. Okay. So then also we have a new law I think that is in the tax procedure code, requiring that any person who wants to deal with any government entity or regulatory body should have a team. So if you're a person who is always hiding, or is a briefcase company, if your things are not clear, you will not be able to deal with any government entity. Maybe you're a person who wants a practicing certificate, maybe from Uganda Law Society or from ISPAW. You will not get it because you are not registered. The first thing they ask for is for a TIN, and obviously maybe with a TIN follows the other things of compliance and what. Then also any person who wants any service from government, any tender, TIN. So those are some of the benefits. Some. There are many others, obviously. Reputation, many others, but those are some. Then we also have consequences for this person who doesn't want to comply. We have what we call penalties and assessments. For example, in return filing, if you don't file your return by the due date, our due date is tomorrow, we have a penalty of 200,000 per month, or 2% of the liability, whichever is higher. So you may be here and don't tell you I have not been working. You don't file that in your return. You don't tell us. But by 11:59 p.m., if you don't file that return, the next day you'll find a penalty on your messages, telling you have a penalty of 200 because filed your return late. But this keeps accumulating until you file that return.
Okay.
Then
Joelia,
payment.
probably if we are to move on, how can you redirect our taxpayers who want to get more information?
Okay.
The service
Then,
channels.
our contact center has been revamped, yes. These days we work from 7 to 11 p.m. We have a toll-free line, 0800 11 7000. Then we also have another one, 0800 21 7000. That is our toll-free. They work from 7 to 8 up to 11 p.m., 7 a.m. to 11 p.m. So we also have a services email. If in case that return has failed to submit, you failed to upload, there are issues, failing, error sheet, whatever it is, send it to services@ura.go.ug. The contact center is available to assist you. We also have a WhatsApp number where you get instant feedback. That is 0772 1400. So you can call them, you get instant feedback. You can even try it now and say hi. Instant feedback. You have instant feedback.
Okay,
So
Joelia, there's I don't know if it's, there's a viewer here who was asking, I think we might have skipped it, receipts from suppliers, do they have to be, just in a few seconds, just answer them so that we can.
you see,
To claim expenses.
you see, for VAT now. For VAT, yes. But for income tax, because in this year we have been running a hybrid. Remember, the IFRIS was supposed to be, people are supposed to start using IFRIS by 1st July 2020. But because of the challenges of onboarding, challenges of registration, we took a long time without enforcing this. So you find that there are people who have receipts that are manual. So I believe in the income tax return is going to still be a hybrid, because we have some months where people were not issuing physicalized receipts. By going forward, of course, we started in November. November we stopped the hybrid. Now we have physicalized receipts. So going forward, we expect all those receipts for VAT registered taxpayers to be physicalized.
So it means if I'm not VAT registered for now?
For now, it is okay. They don't have to be physicalized. But for VAT, because they are the ones who are gazetted to issue physicalized receipts, for them they should have physicalized receipts. But we started enforcing this November. The other periods we are having a hybrid. Some physicalized, some manual.
Okay. Yeah. Okay, I think Osi's question has been answered. We cannot exhaust the bank of knowledge that our experts have. I know we shall be having more of such educative sessions. I want to thank Joelia for having made time to be here and share the wealth of knowledge. I want to thank the studio team, Maria, Irene, Paul, and Trevor, for having made this production successful. And in a special way, I want to appeal to our taxpayers who are viewing this session to, first of all, note that it is going to be broadcast on our YouTube channel. It will be shared. You're going to be able to learn more and also digest. For those probably who could have come in late, you'll be able to find it on our YouTube channel. we request you to follow us on YouTube so that you can be able to get notifications of any new uploads that we put there. And in a special way, I want to encourage us and appeal to all of us who are watching that for any country to develop, you need a very good resource envelope. And for a country like Uganda, which is still struggling with the tax to GDP ratio, we are relying on you, the Ugandans out there who are doing business, who are doing profitable ventures, to file your returns and make that small contribution that you have to Uganda Revenue Authority and to the government at large, because we are targeting to at least make a good tax to GDP ratio of above 20%. That is when, as a country, we'll be able to achieve meaningful and sustainable development. Thank you so much for viewing. We want to thank you in a special way. Tune in to our next sessions. Tomorrow we are going to have a session on cancellation of credit notes, and we shall have a team of experts here still to explain to us what this means to us, especially the IFRIS registered taxpayers. But from us at URA, we want to wish you a happy new year 2022. Stay blessed and keep safe.
In chess, the small one can become the big one. It's the same here. And here too. Watch every move. Record every number so you can plan better. No matter the size of your dream, tomorrow's success